Hi everyone, this is Will, and today I'm helping you to understand looking at a change in the budget. My income previously per month was $3,389.88. I've experienced a decrease in my income per month, so I'm starting a new series of videos. I'm being a difference of $42.32 per month. This is going toward my retirement, so I'm bringing home less. The new income that I'm having to do with Velocity Banking is $3,347.54. Other income, other sources of income or monies that I'm gonna be able to have and put into the line of credit to bring it down on a daily balance is $2,075. My expenses in general have increased to about $4,500 per month. That gives me about a cash flow of $952.54 per month. So this is my net income in California per month. Net income after taxes. So with that in mind, again, $952.54 of cash flow, which means after paying my bills in general, this is what I'm left with. Now, in looking at the line of credit that I have in doing Velocity Banking, 50,500. In July, the last balance was $50,424. I'm taking all of the sources of money that I have. I am subtracting that from the HELOC for the month of August. That gives me 4501 as the balance at some point because my entire check is going in because I can write checks to get it right back out. And now I have to add back the expenses for the month, as I said, about 4,500. That took the HELOC back up to $49,501. There were 31 days for the HELOC cycle. And I think it ended 8/9/24. So the HELOC cycle, they charged me roughly about $14.14 per day in interest from about July the 8th through August the 9th. That came up to 403 that I got to add back into the HELOC. That brought the principal balance back up to $49,904. When I look at my HELOC statement, this is the time period that it ran, 31 days at about 14.14 per day. And this is the interest that they calculated. And this was my final balance. And looking at my statement, the average daily balance for this time period, they clocked in at $46,472.59 for the average daily balance. Now, the average daily balance is like if I started from 5042, when I put in my income for 2 weeks, that kind of like hit the daily balance, so it could have dropped by 1,000, then went back up 1,000. I paid the student loan, so that went back up. Paid some mortgages that went back down. So on any given day, whatever was the daily balance, they took all those daily balances, multiplied it by the interest rate, which is 10.25%. And I'm not going to get into a lot of the details in general for this first video with my new income, but I just wanted to come in and let you know that my income has gone down by $42.32 per month. my new net that I'm be working with and going forward would be $3,347.54 in California per month to live off. Okay. All right. This has been Will, aka Dr. Financial Literacy. Trying to pay down debt using a line of credit, working with clients and individuals. If you're interested, please drop me a line or give me a call. Let's see how we can use various lines of credit, not just this home equity line of credit that I have, but using your credit cards and other aspects to pay down debt. Okay. See you in part 2. Have a great day, everybody. Bye-bye.